I will not betray the Republic.
Hello everybody, this is me Astro, and today I'm going to have the trade breakdown and market overview. So, the last trade I opened was 4-hour PO3 longs. So today I'm going to explain why did I open the trade. On 4-hour time frame, you see that price is strongly bullish, we're trading at all-time highs, and we have a trendy market. This means that we will leave a lot of unrebalanced ranges behind us, and we will move in one direction. So, trading at all-time highs means that longs are higher probability. And on daily time frame, you can see that we came down, we made the weekly low in the daily order block, as I mentioned on my Twitter that we would have an open low high close week. I also mentioned that we would be coming down to this lows because of the market maker sell model. This happened. YM left the fat SSMT with these lows. We rejected from the daily order block, and we reclaimed the inverse fair value gap that we had. We also made a new bullish order block. So going down to the 1-hour time frame, we can see that we have a strong bullish order flow. We're disrespecting bearish pit arrays, we're respecting bullish pit arrays. Right here, we came down to this 1-hour fair value gap. We IRF'd it, we couldn't go to the CE. We respected it, and we started a buy program. So what's a buy or a sell program? A buy program means price going to a buy side liquidity strongly while offering 1 to 2 fair value gap entries. So that's what happened here. We had a strong displacement up to the buy side right here, and we're trading at all-time highs. So when you're trading at all-time highs, you don't have specific targets. You have to use your standard deviation levels for targets. So on the 15-minute chart, what happened on New York AM Open? We left a fat 15-minute fair value gap. So this fair value gap was a strong price point for us, and I'm going to explain why was it a strong price point for us later in the video. Now let's get into the chart. On 15-minute, we had a low resistance liquidity right here, which we ran through. We displaced above all of these liquidities. We formed another 15-minute order block while respecting this 15-minute gap right here. We also left an SMT on these lows, and we had a 15-minute market maker buy model here. No, yeah, and 5-minute market maker buy model here, delivering from 1-hour gap. If you wanted to trade pre-market, you could have also longed after displacement here from this 1-hour gap right here on the retrace of the displacement. Anywhere from here, any displacement could count as an entry trigger. You could have targeted this size right here, but I personally trade power of 3, so I was waiting for 30-minute PO3 on 9:30 New York game opening, or 4-hour PO3 on 10 a.m. So going over to the 1-minute time frame, when 9:30 opened, we manipulated down to the lows and left the microcycle sequential SSMT. What did this sequential SSMT tell me? This told me that my bias is correct. We manipulated on the lows, made the low of the 30-minute candle, and we would start a buy program. What happened here? Same thing. We manipulated down, went into this fair value gap, left the microcycle SSMT, and we delivered to the buy side, taking out all this liquidity right here and continuing the bullish run. So, as I mentioned, this 15-minute gap was a strong price point for us. Now, let me explain why. Right here, on this 15-minute gap, M and Q came in here. We retraced into the gap, but ES didn't. So what does this tell us? This is telling us that we left a cracking correlation. SMT on this lows plus SMTF, that's a quarterly concept, another type of a cracking correlation when one index taps a Peter array or fails a Peter array and one doesn't. It doesn't always have to be about going into the Peter array. It can just be about. It's only about fair value gaps. Sorry, I got lost in my thought process. It's only about fair value gap. So if one index makes a fair value gap and the other doesn't, that's an SMTF. If one index taps into a fair value gap and the other doesn't, that's an SMTF. So that's what happened here. MNQ tapped it, ES didn't. We left a cracking correlation. So I was looking for longs from here. I got break even on ES. When we formed this cracking correlations, I entered somewhere around here. No, I think my entry was lower, like this, and my stop loss was at this low, targeting this buy side, and I was already break even right here, and it sadly stopped me out. After this, I knew that price was still bullish, but it had to manipulate again on this low. So when we formed another microcycle sequential SSMT, I was sure that the price would have started going up to this relative equal highs right here. How did I know that? So we already had two cracking correlations confirming the sequential SSMT. We also tapped into a 15-minute gap when we left an SMT behind it. 9:30 manipulated. We were in premium when we opened on the 10 a.m. candle right here. We opened somewhere here. We were in premium. We came into the discount of this range. We left an SMT on this low, so we formed another SSMT. And after this, everything was confirming that the price was begging to go up to this highs. So I marked out a 50-second CISD as I usually do for my entry trigger. It was somewhere around here. I don't remember exactly. You will see it in the video in the intro. And my stop loss was on the 50-second CISD is low, and my target was all up here on the relative equal highs. As you can see, price swept this high and instantly came down to my entry. So peace out, goodbye, and if you want more trade breakdowns like this, comment, subscribe, and let me know. Goodbye guys, have a good trading week.